Yeah. All right, good morning, everyone. I'd like to call this meeting to order at 9:01 a.m. Heidi, can you please do the roll call?
Yeah, Treasurer Piazza,
Here?
Jean Rondo.
Here.
Mark Cirillo.
Here.
Michael Cicerone.
Here.
Joseph Codiga notified us that he wouldn't be here today and will be sending his designee, Christoph Demers.
Here.
Matthew Howard notified us that he would not be here today. Yen Lee. Here. William Murray.
Here.
Claire Newell also notified us that she would not be here. Andrew Nada.
Here.
Alan Plazo.
Here.
Sandra Paquette.
Here.
Dr. Laura Shahi. Here. Michael Tui.
Here.
Jonathan Wilmer.
Here.
Thank you.
All right, thank you, Heidi. I will now seek the approval of the draft regular and executive session meeting minutes of April 9th, 2025 retirement board meeting and of the draft regular meeting minutes of the April 22nd, 2025 retirement board meeting. So moved. So moved. Second. Are there any comments or edits? Seeing none, all in favor, vote aye.
Aye.
Nay, so moved. Thank you. Well, we will ask now to have Justin Maestro, our Chief Investment Officer, to provide an investment update.
Great. Well, hello, everybody. There are a lot of familiar faces in the room. Nevertheless, I feel compelled to introduce myself for those of you who don't know me. Like the treasurer said, I'm the Chief Investment Officer for Rhode Island. I've been with the state for almost 8 years. I'm rounding up to 8. I'm telling people 7.5, but I think it's a big round. I'm looking at the screen. I don't think I've talked to you all in probably about 6 months, but the last time that I sat in this very seat, the first thing I said is, Frank, you got to do something about the camera because it is just squarely capturing my ball spot. I see you fixed that issue, so I really appreciate you taking my feedback seriously. Now, I believe that we'll have some slides up on the screen shortly to reference. While we're working,
You have anything up?
I don't have.
Oh, all right. Hang on, I've got to share your screen. Got it shared, all right. Get down to the slide deck.
All right.
Not many slides to go through here today. I want this to be interactive. I'm here to answer your questions, especially in light of everything that's been in the economy and in turn the markets. What you see, or what you just saw up on the screen here, is our performance as of March 31st of this year, which you probably don't care about anymore, given it's already May 14th. We're probably going to have our April performance figures at some point within the next couple of hours. So if Frank just had listened to me and pushed back the meeting a few hours, he could have had more up to date.
Sure, it's my fault.
Well, you're retiring, so I could just blame you. It's easy. Anyway, if we just take a quick look at how the first quarter of this year had started on the back of 2024, which was just a tremendous year for the portfolio in the markets, with S&P gaining over 20% in calendar 2024. That continued at the start of this year, though we did start to see some pullback in the market in February and March as tariffs came into focus, as valuations in US equity markets became stretched, and other international markets started to experience fiscal stimulus, Germany, for example. So investors started to rotate a bit out of their equity exposure, predominantly US equity exposure, and you can see that reflected in the performance here. If you're looking at this table, the way to read this, and I know you all have seen this, so I probably don't have to explain it all that much. Very top row under the header represents performance net of fees for the total plan across various time horizons. For the 1 month period ended March 31st, the plan declined 1.36%. I would caution you to avoid looking at short time horizons. We are long-term investors. And as you go out 10, 15 years, you can see plan returns that outperform the assumed rate of return, our benchmark, and a passive 640 allocation as well, something that we've discussed here at length. But the bottom line is, about the start of the year, that second column there, the 3-month number, the plan was essentially flat. Only up 0.22%, though still positive 3.5% fiscal year to date. That figure is really driven by our allocation to stocks, public equity. The way that we bucket our portfolio, and you'll probably hear a little bit more about this in portfolio construction when you all eventually have the offsite. But we generally view the world in risk buckets. We have our our income bucket and our stability bucket. Those buckets are further subdivided into the categorizations that you see here. Global equity and private growth, those are the two categories within our growth bucket. Income is its standalone allocation, and then the following three rows there highlighted in blue: crisis protection, inflation protection, volatility protection, all things that sound like risk mitigation. Those sit within our stability bucket. If you look at the second column under performance, that 3-month period, the only bucket that's exhibited negative returns during the first calendar quarter of the year was our global equity. So stocks, and that had primarily been driven by US equities. Now, let's move past March. I'll move down to the next slide here. And you can see some numbers that as of April 30th. And April, of course, was a very eventful month. But if I went to sleep on March 31st and I woke up on April 30th and looked at this page, I would tell you, pretty benign month. Markets were slightly down, but not so bad. When we know intra-month, there was a tremendous amount of volatility. You can see here in the very first column in that top section, equity, those stocks, the second row reflects the S&P 500. During the month of April, the S&P 500 was only down 0.7%. We started off the month, tariffs front and center, Liberation Day tariff announcements, and that set markets into a tailspin. S&P 500 was down over 10% at one point. It went up a few percent, it went down again, it went up 9%, but ultimately it landed on about flat, minus 0.7%. That just demonstrates the volatility inherent in public equity markets. There's a price of admission, there is risk, and we have to be cognizant of risk as a cash flow negative plan. But the point is, there was a wild amount of volatility, especially in the early part of April. How that translates into plan performance, we actually probably ended April, and we'll get those numbers hopefully today, maybe tomorrow. So, right, not your fault, but I suspect that we're probably flat to slightly up in April. But again, we'll wait for the performance figures to be finalized before I make any definitive statements there. I think that's a remarkable result considering what we experienced during the first couple of weeks of April. If you jump down to the next page to just take a closer look at how markets have, or public equity markets have performed year to date through April, this represents a divergence from what we've seen over the past handful of years. All the way to the right-hand side there, you see a column called MSCI ACWI. MSCI ACWI is our public equity or stock benchmark that we use for the portfolio. ACWI stands for All Country World Index. It contains essentially every global market that you've invested, from developed markets to emerging markets. The ACWI is further subdivided into many categories, almost like our asset allocation. It acts as like a rough nesting doll, if you want to call it that. But the four main regions covered by the MSCI ACWI are the USA, which is represented by the Russell 3000, Canada, EFA, which stands for Europe, Australia, Far East, and then EM, emerging markets. You can see that year to date through the end of April, it's really US markets that are down, as again, some of the factors that I had mentioned earlier contribute to the outperformance of international markets relative to the US, which is again something that we haven't seen a whole lot of over the past decade. Why am I showing you this? The point is to just emphasize why it's important to maintain diversification amongst regions, among asset classes, among sectors and strategy types. We came into the year without any sort of regional bias or tilt. We try to make our regional exposure within the equity portfolio reflect close to ACWI index weights. A lot of our peers will have a home bias, but just from a risk management perspective, we like to be globally diversified. That has served us well this year as US equity markets have declined more than international markets. Yeah, there are plenty of periods where that does not serve us well, but over the long run, we expect that to be accretive to the objectives of the portfolio. If you jump ahead a slide, you can see how public markets have performed in May, the first week or so, and this has continued now to the first almost couple of weeks of May here, with global markets increasing across the board. The point I'm trying to make here is that one, we're long-term investors. We're not going to make any immediate changes to our allocation or broader portfolio strategy based on short-term market movements. When equity markets declined in April, we were vigilant about rebalancing and adding equity exposure back to the portfolio at month end. We follow a monthly essentially rebalancing cadence. We can't physically rebalance the portfolio every month because trading is costly. But what the SIC decided to do at the end of April was make our rebalancing mechanism a little bit more responsive, enabling it to reallocate to equities more quickly at the end of April, which is exactly what we did, and the portfolio has benefited from that as well. We didn't have to benefit from that. I'm not here to say, look what we did. We made the right decision. We added equity exposure to the portfolio right before equities started to increase. That is not the messaging here. The message here is that we have a strategic allocation. We have risk that we want to maintain and target over the long term. So even as markets were selling off and investors, myself included, became very uncomfortable with the idea of adding risk to the portfolio, we, maintained our, consistency with our strategic objectives and rebalanced appropriately. Where do things stand today? April, again, like I said, I suspect that we're flat to slightly up, but we'll hear more about exactly what happened within the next day or so. And then May, month to date, we're probably up about 1.5% to 2%. Now, do I think that this rally will continue? I don't know, maybe not. The only thing that I'm certain of is that there's a tremendous amount of uncertainty in the market today. And that is made clear by the fact that markets have just been tremendously sensitive to any piece of information. So to the credit of the treasurer, to the SIC, we're staying on top of the situation and looking at the portfolio on a day-to-day basis, but we maintain a very long-term view. We want to be consistent with our policy and strategic objectives, maintain the elements of diversification and risk mitigation that have helped lead to strong absolute and relative performance, especially against our public plan peers. More to come. We'll keep a close eye on it and keep you updated as the days go by. In the meantime, I'm here for any questions. I welcome questions now.
So there was a certain reallocation you're saying at the end of the month.
Mhm.
Is that something that was determined by the SIC on the fly, or is that something that is in their protocol to begin with?
A combination of both. Now, I don't want to get into the weeds too much about our rebalancing mechanism. So there are a couple of ways that we can rebalance the portfolio. One, we're cash flow negative. So at the end of every month, we have to either liquidate some assets or pull money out of our operating cash account to those benefit obligations. We'll often use that as an opportunity to rebalance. So if we're overweight equities, that would be our source of funding for the benefit payments. That's one way we can do it. Another way is actually a full scale of physical rebalancing.
Right.
If we're overweight equities 2%, or just say 200 million, we can sell 200 million worth of equities and use that cash and reallocate it elsewhere in the portfolio.
What was it this time around, the former or the latter? Was it something that was done as part of the liquid portion, or was it something that you went back in and said?
It's actually option number 3, which I'm about to explain here. So this is a little complex, so just bear with me. Remember I said we have the 3 buckets in the portfolio: growth, income, and stability. Below the line, we have a futures overlay provider that uses derivatives to equitize our cash, meaning give it exposure to markets. And move our portfolio more closely in line with our risk objectives. The way that works, in simple terms, is if our growth bucket is overweight, remember, growth is public equity, real estate, private equity, risk assets that generate return. If that bucket is overweight, the futures overlay mechanism will help to offset that overweight with a short futures position, a short equity futures position. Similarly, if the stability bucket is underweight, the overlay rebalancing mechanism will put on long treasury future exposure to move those synthetically rather than synthetically in line with target. So there are a couple of nuances associated with that program that would have prevented us from adding to our equity exposure.
When you say program, is this something that is
It's
program?
it's systematic.
Okay,
We
that's.
have it in the
I know how to say
portfolio.
it, but
Yeah.
thank you.
And it's been in the portfolio a lot longer than I.
It's not something you're doing manually, it's something that raises, might flag something.
Yeah, we work with an investment manager there
Okay.
in Russell Investments.
Yep.
It's a very systematic program, really numbers based. There was a little bit of a nuance. If we want to jump back up to my first slide here. Now you can see, I'm gonna focus not on the state of Rhode Island total plan row, but right below that, we have the global equity, which that's our public growth portfolio, and private growth. You can see in columns 3 and 4, the percentage of portfolio, that's the actual allocation. And our target allocation in that strategic benchmark allocation column. So you can see that global equities, now this doesn't factor in that overlay mechanism that I was mentioning earlier, but you can see that global equities as of March 31st were a little over 36% of the portfolio, when our target's actually 40. When it comes to public and private assets, we will offset overweights and underweights with the respective public-private asset in the bucket. So our private growth allocation is 19.6% about, well above, well, not well above, but above its target of 15%. That private growth bucket is predominantly illiquid assets that can't be sold quickly. So to offset that overweight, which we will bring down over time by adjustments to the way that the pace at which we commit private assets, we offset that with an underweight to public equity, so that our overall growth exposure is still aligned with its near 55% target. Because that private equity overweight had more than offset the underweight in public equity, that tells our futures overlay rebalancing mechanism, hey, not so fast, we're not gonna move money quickly into equity markets. But the SIC said, look, there's been a lot of market volatility. Those illiquid assets in the private growth bucket are slow to move. And the valuations that we have there may not necessarily reflect economic reality. So what we're going to do for the purposes of calculating our overlay rebalancing is just artificially haircut that private growth market value by 15%, enabling more movement into public equity exposure. Complicated? I know, hopefully that was simple enough.
Reasonable.
All right, thank you so much, Justin, for that presentation and that update. And again, feel free to reach out to him if you have any other questions after this meeting.
Just a suggestion, and I've spoken to Justin about this. On the 17th of April, the Brown Daily Herald published an article. It quoted one of your advisors that the pension fund possibly suffered a $500 million loss. And I reached out to the reporter for the Herald, also to the Rhode Island AFT-HB, because they published it twice in their Smith Hill report. And I noted to them that the information there was inaccurate. They cited 60,000 people receiving benefits from the pension fund, when in fact there's only approximately 30,000 retirees. And I said, your data is incorrect, but you're fostering this apprehension within the system. Based upon what Justin just said about the revised update, and also on comments from our advocates that, you put out your newsletters, perhaps it would be prudent to publish an update based on the latest figures, because I suffered a big loss, but guess what? It's all gone away. It's all recovered. And I think something from your office or from the ERSRI to the public in the newsletter, it doesn't necessarily have to be in the Compass, but to
Give an update.
this, give an update and soothe the fears that are out there. That would be prudent from my part, because otherwise these people are still believing the April 17th Brown Daily Herald story that says, hey, we have a possible loss like this. And that's not good for the elderly. I mean, trust me on
Are you
this.
losing your hair on that over that?
Say again?
You losing your hair over that?
Never. I don't even worry about that anymore. But I think it would be a prudent decision on your part.
Point well taken and noted, so we'll go back and huddle on that.
Richard, just following Alan's
Yes.
comment, I agree conceptually with what Alan is saying. But I think the other challenge, Alan, is, are you gonna make those updates multiple times a week?
Right.
So, that's the volatility.
Yeah,
That's
that's a
the
good
tell
That
you
was a
go
good
forward,
one.
so it's gonna
Yeah.
be difficult to stay ahead of it.
That's what I was gonna say, you kind of want to timestamp it because
You
it
do.
changes so
Yeah.
much, right? So we'll figure out something that provides more context as of what's happening.
Perfect.
Do we have any ability on misinformation like that to attack that right away? I know it's,
Yeah,
But-
again, it was. I'm sure the question was asked when all these tariffs were coming into place, and
yeah,
so the realities then are different from the realities today.
and it's also, I mean, if it's misinformation as you stated. You know, I can understand it's changing all the time, but I think the misinformation has to be corrected. Directly force them to make the correction.
Yeah, well.
I
So I think that's
challenged it.
important.
I challenged it immediately when I
Yeah.
saw it
Yeah.
on multiple fronts, and I never got a response back, but I have a paper trail. I have the data. I think you understand I'm data driven, and that's something that needs to be taken into account.
All right, thank you very much, Dustin.
Thank you, everybody. Mr. Chairman, if we may.
Yes.
If it's possible, if we could move items for the administration audit risk and compliance committee forward. Gene needs to leave by 10:30 and he's the chair. And wonder if we can get a motion to do that.
You get a motion to move?
Motion.
Okay.
Second.
All in favor?
Aye.
All right, we're gonna move.
Thank you.
The Administrative Audit Risk and Compliance Committee, pass it on to you, Gene.
Thank you. The Administration Audit Risk Compliance Committee met on Wednesday, May 7th to discuss proposals that were received by ERSRI for RFP number 2025-01 for IT security and compliance services. That was issued on January 6th, 2025. The Executive Director advised the committee that the RFP scope of work included 7 major tasks to be completed that included risk assessments, current policy reviews, vendor ID environment reviews, social engineering, and on-site support. And having said that, I will turn it over to Frank and Heidi.
Okay, thank you, Mr. Chairman. So, what I wanted to, what you have here today is that we had an RFP that we did for IT security and compliance services, which we've done quite frequently. We've been doing them since 2007. Every couple of years, we go out, we do an RFP. The last company we had, was a company called Bulletproof. Bulletproof, contract expired, so we went out and did another one. And this is the result of what we had tonight. I wanted to get that across. As the chairman, Roxy, you can change the next slide. As the chairman mentioned, the administrative committee met and I went through all the details with them. And I want to just give you a little bit of the process and how we got to this place. We did the RFP, again, consistent with our regulation. There were 17 proposals that we received. About information, 4 of them were disqualified based on what the requirements of the RFP were, what we asked to be provided to us, and whether or not they had information. So those kind of came off the radar screen. The other thing that we do, which is again required by our regulation, is a bidders conference. The way we handle that is we specifically put in the RFP that you may ask us questions by this date. We will respond by this date, and we will send them to everybody who asks questions, or anybody who says, I just want the questions. So there's an opportunity to go back and we can go ahead and document and make clear to all who wants it. And if somebody later on says, hey, after the date of requirement, I didn't ask for the questions, can I have them? Of course. You know, there are just questions that are out there. So that's the process that we kind of drive inside. Next slide, Rox. The other part that the way we reviewed it was reviewed internally by a bunch of people. You can see Jay David, Eric, who's sitting in the back, and Stacy Witten, who's sitting in the back, and Heidi next to me. Dante is the IT support. And what we did is we reviewed them, based on the responses that were there. We narrowed that down to 12 proposals. Or we narrowed it to 3, and then had a score sheet, which I will show you, and I don't expect you to read that. But 1.2 is that we gave preference to companies that are within Rhode Island, domiciled here, or have a local office. And part of that was just being able to cut back on. There's a piece that we had inside that we want support for a 3-year window where someone's going to be in our office and, keeping on top of that process and keeping on top of us. And we figured that was going to also do 2 things: put a little revenue back in the state, if you will, as well as cut travel costs to be here on a monthly basis. Having said that, this is the next slide, Fox. The score sheet that we had there. And again, I don't expect you to read it, but that's what we used. So we had a very consistent review of it. We met a bunch of times, discussed what we all, why somebody thought this was different, that was different, and how we arrived at our piece. Next slide, Rox. So this slide is kind of the results of that. I'm going to kind of try to walk you through it. So the blue bars happen to be the scope items that was asked within the RFP. This is what we're asking you to do. We want these kind of tests. We want this type of information. And they got scored based, on those responses. The orange boxes on top are the points that they get for their cost. So in its most simplistic sense, the firm with the lowest cost gets the highest number of points, and then it travels based on that. The 3 by pure math that came to a head happened to be Compass ITC, which is based in Rhode Island, Ernst Young, which has a New York and I think a Boston office. They have a local office, but I believe that local office is really an accounting kind of venture. And Cherry Bekaert was also a Rhode Island company. The yellow line that's in there is to give you some frame of reference of it's the median score. And what we were trying to be able to present to you is you can kind of, in essence, see everybody can do this, but you can kind of get a sense of where they rank in terms of what they were able, how we ranked them and what they provided. Some of them are maybe below the median a little bit based on what we believe that, they were able to provide us. Some are above. And that's got a lot to do with maybe some of the staff that they have, some of the jobs that they have, what their references were. We check references of the top 3 people and get a sense from that. And we score all that. So the point was to say they can all do it, but some just did it a little better. Some had a lower cost. But the point here is that they all can do it. And there are a couple that you'll note that are below that radar screen, which obviously weren't the ones that were interested. But the green folks were the ones that were most important. Roxy, give me the next slide. The next one here was to give you a sense of when you talk points on score, you're sometimes a little blinded by what kind of dollars are we talking. And in this particular graph, we said, the team or the company with the lowest cost was $115,900 at SIS audits. They got 20 points. if you look at the other firms, they were in, 145, 191, and Ernst, you can see, is 337. There you can see Janus at 701,000. So the whole point was to be able to help translate for you. When we're saying they got a very low point score on cost, I want you to see the cost so that you can understand how many dollars we're talking to do so. The point is that they, again, if you can go to the slide before, Rox. There you go. The point is they can all do the work. They all have, skills. We check references to be sure. We're very conscious of what we read and how we score. We want to kind of talk to their clients to say that, yeah, this is in fact what they did and, how they did that. But again, we gave preference to those who are local firms. We looked at where they stand in the median of all the point scores. And then last piece is, what kind of dollars are there. And I think from the last time that we had hired, I was seeing that when we first hired them. The difference was with them that they were a bit of a smaller firm, but their cost was kind of a median cost. And when the team reviewed them back then, and we had some help from Do It when we went through it, the point that they tried to make to me is be careful of looking for firms who say they have an inordinate amount of skill, because some of the tasks that are required, like a pen test, is something that somebody who's got a background in it can do it. So they said, don't get blinded by, get somebody who can do the work, who's got good references, because the technology efforts are, basically right in range. And I think the point was, don't get disguised by price. See that the team has done it. They've had good references. So we've kind of stuck with that piece. And having said that, we thought that of the three that we had, they were very capable, had good references. And, I think when you come down to the dollars, it made a whole lot of sense to us to go with it. So I'm going to stop there and ask if there are any questions.
Any questions for Frank?
Roxanne, last slide on that, please. Thank you.
If there are no other questions, I would ask for a motion to recommend the board authorize the executive director to execute a contract with Compass IT Compliance for IT security and compliance services consistent with RFP number 2025-01 at a cost of $145,900.
I'll move that motion.
Second.
All in favor?
Aye.
So moved.
Thank you.
Thank you.
All right, well. Back to the executive director's report. Right?
Okay, Heidi, you got a couple items you want to tackle first, and then I'll do mine. Or just me? Okay. So just a couple items. Again, we handled the risk. Governance committee also met. Andy Nada will kind of update you on the what happened with that and give you a little bit of a flavor on what happened with the executive search. The one thing I do want to get on your radar is we've contacted all of you. We will have a board training. It will be on May 29th. It'll be from about 9 to about 2:30. In that particular training, we're going to have our actuary and one of the legal counsels that we used to kind of talk a bit about the second layer of the fiduciary training and kind of tag team, if you will, with the actuary, so they can kind of give you a perspective on planning longevity and all the components that make that up.
Where is it?
It will be at CCRI. And then we're going to drag Justin back.
CCRI in Warwick?
Yes, yeah. And then we'll drag Justin back in the afternoon. He will kind of go through the portfolio and kind of tie, both of here's your fiduciary component of it, here's your actuarial component of it, which they'll work together. And then in the afternoon, Justin will follow it up, but now the portfolio and how that kind of folds in. So with that, concludes my part. Yes, ma'am.
Would you be able to make that a team meeting? I won't be here on the 29th. I would like to join, to listen to the talk.
Let me see, I think I might be able to do that for you.
Thank you.
Yeah.
Anything else, Frank?
No, that concludes my report, Treasurer. Thank you.
Thank you very much. Any questions for Frank? Seeing none. Can we please move to the approval of the April 2025 pensions as presented by ERSRI?
Move approval.
Just one piece on that, on those, you actually approved those last month. Because we had the second meeting, inadvertently, we had the wrong date on the report. So we didn't want it to be out there with, I guess, March, it was actually April's pensions, because of the date was after the fact, so. In an abundance of caution, and I'm sure Patrick would have jumped all over me on it.
Sorry, motion second, all in favor?
Aye.
So move. Sir,
So you have the legal counsel reports in your packet. There's only one substantive matter. It was the Charles Pearson matter, which was heard by the Superior Court on a motion for summary judgment. That was a PEPRA action where we were seeking to revoke or reduce Mr. Pearson's pension benefits based upon a felony nolo contendere plea that he made to second-degree sexual assault. Judge Christopher Smith determined that PEPRA was not applicable to this non-financial based crime. It is a statutory interpretation question. Order has not yet entered on that case. We are fully prepared to file an appeal to the Supreme Court within 20 days of an order entering. We have been contacted by counsel for Mr. Pearson to see if we want to engage in some sort of discussion prior to the entry of an order. We are listening to that. If that turns out to be the case, that's something that we want to explore. We'll bring that back to the board for your consideration on an executive session as to whether you want to engage in those discussions and entertain those discussions. But that's the update, one substantive update that's included in your packet. I'm happy to answer any questions regarding that.
question for legal counsel. Seeing none, thank you. I will now call on Dr. Shaw Hughes for the disability report.
Thank you. I'll just make a motion to approve the disability committee recommendations from our May 2nd, 2025 meeting.
Second. All in favor?
Aye.
So move. Thank you. We'll ask Andy for the governance committee update.
Great, thank you, Treasurer. The governance committee continues to move forward, I think, in a timely way regarding the recruitment process for our next executive director. We held a meeting this past Friday on the 9th with Kim Bradney from CBIZ Talent and Compensation Solutions, with the majority of the committee present, as well as legal counsel Bill O'Gara and the director. That was a targeted discussion, really the first group meeting that we've had with Kim Bradney regarding the recruitment timeline and process. The process itself included really a targeted discussion on the project launch, a timeline for certain deliverables, marketing strategy, when the search would officially be launched, recruiting, interviewing, candidate due diligence in terms of follow-up research on our final pool of candidates, as well as final candidate selection and offer negotiation. The process started in late April, and tentatively we have it concluding at the end of June, beginning of July. But I think we all realize that's going to totally be dependent on the quality of the pool of candidates that we have and how we proceed through that process, then coming back to the full board with a recommendation and an interview of one or more finalists for that position. In addition, Kim also provided some additional updates regarding her background, the team that's going to be working on this for CBIZ, Tamara Wesley, as well as Connie Davis. Committee followed up with a fairly robust conversation regarding the job description, which was the director's original state description. So I think we all agree that that needs a little bit of work. Going back 20 plus years, it's done in a very, very simple way. And we think we all felt that it was important to take advantage of this opportunity, because it doesn't happen often, to modernize it and make it more appropriate for the demands and the functions of the position today. We discussed recommended changes. A number of committee members brought forward their own research on various topics, including things like, you know, a revised essential function statement, not only basics on qualifications and responsibilities, but also things like duties and requirements of interaction with the board, public relations, interaction with members, member services, financial and internal control, investment and actuarial matters, legislative responsibilities, and the like. So there was a lot of discussion. What we tasked Kim with was to go back and provide, knowing that she's touched probably hundreds of these similar types of job descriptions over time, to capture some of that information, bring it back. We shared with her our perspectives in a group setting regarding what our expectations were. So she's going to bring that back in a draft form. The committee will decide if it's good to go, and we'll move that forward. What we also decided to do as a committee is that was the first opportunity that we had a chance, but it was done in a group setting to engage her directly on different perspectives, because we all have different backgrounds and things that we see today in the organization and things we'd like to see in the future out of our executive director as the organization changes over time. And so we've also established an opportunity for committee members to individually get on Kim's calendar to engage representatives from the treasurer's office, as well as representatives from the professional staff here at the retirement system. A couple of key members of the core team will have an opportunity to also provide. This is not an additional performance review of the director. This is a look forward, regarding, I think he was relieved to hear that. So I think as we look forward, just, how the organization's changed, what they see in terms of the culture, and it's about fit and chemistry. I think we all know that it's competence is critically important, but it's also fit in the organization. So I think we all felt as a committee, it was important to provide an opportunity for our core group to be able to express that and be able to educate Kim and her team on the merits of that. And also, I think what's coming through on functioning in the state of Rhode Island and how we function as a government. And that might be different from other states as we have candidates that apply from around the country and beyond. Committee discussed in some detail. I mentioned that in terms of the stakeholder process. So Kim will follow up with that. She's already communicated with the director who's pushed it out. So a lot of us from these different stakeholder groups will be getting on Kim's calendar and moving that forward. These discussions, I think it was a concern of some on the committee that it could delay the process, and that's really not the case. This is to supplement the process and to provide Kim and her team with additional information. So she's moving forward. We expect to have a job description completed. They're working on the marketing strategy and the profile of the position, which I think a lot of us are familiar with them. You're probably looking at a half a dozen pages, talks a little bit about the organization, the staffing structure, the reporting structure, the differences here through the treasurer's office where it may differ in other places, the lack of a direct investment responsibility of the executive director. And so we're working on that profile. It'll be put together in a nice package that will be utilized to help showcase this as they reach out to viable candidates around the country. We expect to have that done in the next 1 to 2 weeks and have that out. Kim also reviewed, which I think some of the committee have already seen a draft timeline, which broke out the given areas. It's really tentative at this point, but it helps us move forward fairly quickly through the process. And as the committee's aware, just as a reminder, we awarded the contract for a full complement of services that includes significant involvement of the company itself. And that covers everything from a client needs analysis all the way through post-search follow-ups with candidates. We're going to make decisions later regarding how active we want the firm involved in negotiations with finalists or not. And I think that will really depend on the nature of the group, which I think we have a terrific governance committee together to be able to lead this, but we'll be engaging with the director, treasurer's office, and others as we go forward. That's my update for today, Treasurer. Happy to answer any questions.
Questions? Please, Sandra.
Yes, my only question is about the timeline.
Yeah.
Now, how does the hiring of the new person coincide with Frank's retirement? Do they overlap? How does that work?
Yeah, I think timing based on when the process was started, so there won't be, and we may lean on Frank a little bit to be able to provide some of that transition, but Heidi in a month or so from now will be assuming that role in the interim. It's unlikely that the committee would have a recommendation for the full board prior to Frank's retirement, but we would expect it to come shortly after. I think the transition for us, that doesn't mean the person would start right then. So that's gonna depend on the selected candidate and how much transition time they may need. If it's a month or two of transition, then we would be engaging really with Heidi and the team here to assist. So there is going to be a gap in time where the deputy will take over and then we'll move it forward. I mean, I think the timeline's a good timeline, and it's really gonna depend on the quality of the candidates that we have and the adaptability in their schedules to assume the position. Could happen quickly, but our crystal ball doesn't quite tell us yet, you know, how long that gap is gonna be. But it comes in the summer, which I think is a good time, when things tend to slow a little bit in terms of activity, governmental activity in the summer, once the session's finished. So I think we'll be in good shape as we get into the fall.
Well, my concern was, will Frank still be here to assist in the transition?
Not officially, but that's something we
yeah.
can talk about. Yeah.
100%.
I interfere with your.
I'm not like leaving the country, never to come back again, trust me. And most people got my cell phone, and I made it very clear, I'm more than happy to, you know, my own time, come back and walk through wherever I can get somebody. My goal was not to leave you and the board and the treasurer at the lurch of now what, not that I'm the high heavens, but I'd like a smooth transition to come across, so I will certainly be there.
Just so you know, the board is, governance committee is being very respectful of, we don't want to assume anything. And I think we as a board shouldn't assume Frank's gonna be here for 3 extra months just to help us out, right? So I think we're being Frank has been tremendous, and I would tell you otherwise if that was the case. But it has not been the case. Frank has been fantastic in this process. We are also trying not to burden Frank with managing an accelerated process to find his own replacement, right? So that is something that's just professionally respectful of Frank in his role. So we're taking on some of those responsibilities to make it as easy as possible. It should be not to be a stressful time as Frank finishes his career here with the retirement system, but he's been incredibly gracious and willing to help in terms of with the transition with the professional team here at the retirement system.
Any other questions for Andy? Well done, Andy. Thank you so much.
Thanks, Treasurer.
There's no further business or new business. I'll ask for a motion to adjourn. Move. Second.
Second.
All in favor?
I.
One has adjourned. Thank you. You have more than.
I know, thank you.
You know, trust me, as a disability office, you sit back and look at the clock and go, oh, great, we're making good time, and I'm like, yeah, it's like the kiss of death. Yeah.
That's why I say, don't say it.
Good job, I'll mention that.